Good morning. It's Tuesday, March 12th, about 6 a.m. Central Time. All right, the precious metals are slightly weaker after edging out a small gain on Monday. You've got April gold down $6 at $21.83. You got May silver down 4 cents, $24.67. May copper slightly higher at $3.93. April platinum down $7 at $9.33. Big move yesterday in the platinum market, running right up into resistance. It shot right on up here to the 200-day moving average at 939.40, got slightly above it and then started to back off. So big extension upwards. Key level support's going to be 916 on the April platinum. Looking at June palladium, down $11 at 1030. So about $100 spread between the two, between platinum and palladium, and then the gold silver ratio at 88.5. So that has been ticking lower as silver's been slightly grinding higher and the gold market is stalled out at that $2,000 or $2,200 resistance level. So I do believe that it's slightly overbought, and a lot of traders did unwind positions at those. So it's been impressive. It's been an impressive rally, and yesterday was more impressive on the gold market, eking out some gains even with that dollar strength coming in. So we're looking at what's going on here, and really I believe that it's been the central bank buying that's really fueled this recent rally to the upside. We've had about a 5% move higher in about 4 consecutive sessions. So looking at the gold market, the latest CFTC data shows that speculators have increased their net long positions in COMEX by about 63,000 contracts. That was one of the largest gains since June 4th, 2019, and it's also the second largest gain recently since the start of the year. Remember, a lot of people position and change their asset allocation structures coming into the start of the year. And I think that that's why we saw those bullish bets right at the get-go. So the next upside objective, I think just a little bit higher than 2,200. Your line in the sand is going to be 2,150 on the gold market. I think if we retrace back below 2,150, there's a big air pocket there down to about the 50-day moving average and also the trend reversal point. We'd see it have to defend 2,100, and then below that's going to be about 2077. That's where those two data points lie. On the silver market, I really believe the 200-day moving average, that's your critical line in the sand here of the 200-day moving average. We break below there, we could quickly retrace down to the 50-day moving average, which is 2330. Now, if you look at the CME Fed Watch tool, you go to the June meeting, you can see that it's about a 72% chance that the Fed does cut rates at the June meeting. And I think a lot of this buying here recently has been central bank buying, because remember, as prices went up, we actually saw an unwind on GLD and the amount of ounces that are being bought. It was actually a liquidation going on, which tells me that that's a short covering rally. So looking at the next upside objective, again, I think it's 2203 on the gold market, and all eyes are going to be on the February CPI report, with headline inflation expected to remain at 3.1% year over year, and the core inflation expected to tick lower at 3.7% from 3.9. So if we see that tick lower, we could see some little bit of a reaction back to the upside. However, I don't anticipate big fireworks here. I don't think that it's going to move whether or not the Federal Reserve is going to cut rates or not. I think that that's baked into the cake. Now, a couple other markets that we did identify yesterday. May soybeans taking just a slight breather. Yesterday it was a little bit weaker, poked up, made some new recent highs, and then also backed off. We've had a 70-cent rally in the last 2 weeks, and I think your resistance point's really about $12. Your critical level support's 11.72, and below that 11.76. The other market that we did flag was the May sugar contract here. 1 week highs on there, and then Brazil did lower their production expectations, and then also India is extending those output cuts. So that's why we're really taking that bullish positioning on the sugar market. You could also look at sugar and also the soybean market and see technically where those support levels come in. I like these markets that are easily identifiable as far as support resistance levels. Same thing with the crude oil contract. The December contract dipping below 73. Many of you bought the contract below there. Now we're back over $74. That's been your resistance point, and they're starting to let some of those contracts go. So if you got any questions, give me a call. I'd love to talk to you. Remember, if you're trading the equity indices, you want to be in the June contract here, as the March is no longer the front month. You got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.